In spite of the fierce competition and market difficulties that Tesla faced, the company has released its fourth quarter financial results, giving investors even more reasons to consider purchasing the shares. With Tesla's reported earnings exceeding analyst predictions and shares increasing by more than 50% from last month, it's no wonder that people are feeling optimistic. If you're curious about the potential benefits of investing in Tesla and putting your faith in the big boss Elon Musk, keep watching this video. But before we go there, be sure to smash that like button and subscribe. Do you I'd spike the advice that investors shouldn't get too caught up in quarterly reports because they can't help spawn trends or validate or displace what stock experts have been saying about a company's prospects despite the company being faced with intensifying competition and other market challenges. Experts say you shouldn't miss out on Tesla stock, one of the hottest growth companies today. Many people have expressed optimism about the possibility of retiring early thanks to an investment in Tesla stock. Release of its third quarter financial data has given investors even more incentive to think about buying Tesla shares. In contrast to the 99 cents per share that analyst polled by Reuters expected the firm would announce, Tesla's reported earnings were about $1.05 per share. Revenue during the third quarter of 2022 was $21.45 billion, as opposed to the analyst's projected revenue of $21.96 billion. The automotive gross margins remained constant at 27.9% from the second quarter, despite Tesla's net income difference of $3.33 billion. The automaker's operating free cash flow was $3.3 billion in the most recent quarter and hit a record high of $21 billion. Tesla made $1.62 billion during the same time last year, up from $0 the year before. Given that Tesla shares have gained by more than 50% in the past month, investors are feeling more optimistic that their investment in the company would enable them to retire early. Tesla executives spoke about a wide variety of geopolitical and economic issues, as well as CEO Elon Musk's potential takeover of Twitter, were among the topics posed during the conference call. By 2021, your money would have almost tripled if you had invested $1,000 in Tesla in 2020, when the stock was only worth slightly more than $400 per share. Oh, the firm has announced the launching of the Cybertruck and the Tesla Semi. Your return would have been considerably higher if you had traveled back a few years to November 2, 2016, when Tesla was traded at about $30 to $8 per share. Although it's true that the Nasdaq owns every stock in the S&P 500, making it automatically diversified, Tesla has been evasive about why investing $1,000 in the company in November 2011 would be worth almost $200,000 today. This is based on the stock's price rise from 5.74 cents to 12.29 over the years, a return of over 20,000%. By contrast, investing the same funds in the S&P 500 would have yielded only 357%, which is a good return, but nothing compared to Tesla's return. It's true that most experts, including the renowned investor Warren Buffett, believe the Nasdaq is a better place for most people to invest their money. However, it's safe to say that Tesla has established a name for itself in the industry, and the EV manufacturer's recent success suggests it will continue to thrive. Indeed, the company has many supporters who support it because they share its vision of a cleaner, more environmentally friendly world. Went to one-day cash in their shares of Tesla stock and retired comfortably. To retire comfortably in a Western country like the UK or the United States, one will require at least $4,100 per month, with immediate retirement income in the U.S. being around $47,000. In the meantime, those who reside abroad likely already made plans to retire elsewhere, perhaps somewhere like Panama or Mexico, where they can get by on much less in their golden years. However, if you'd rather stay in your current country and need at least $4,000 per month to retire comfortably, and you want to retire by the year 2030, the minimum amount needed should be increased to around $50,000 using a standard 5% withdrawal rate to account for inflation. If you want to retire with $50,000 a year and spend just 5% of your retirement savings each year, you'll need at least $1 million, and you'll have to stop working for at least 20 years before you run out of money if you don't do anything else to increase your income. It sounds like a lot, but with Tesla experiencing stratospheric growth year out, this could be within reach for savvy Tesla investors. Why should we believe that Tesla will keep raking in these returns? Let us listen to two distinct specialists. Renowned investor Cathie Wood, the CEO of ARK Investment Management, has been a big fan of Tesla and Elon Musk since January alone. ARK funds bought 663 Tesla shares for a total of $105.4 million, with Precise Sciences and Zoom Video Communications as the two largest holdings in her flagship ARK Innovation ETF. Tesla comes in third. The area concerns about supply and demand have contributed to Tesla's 58 stock price decline over the past year. Though she believes that Tesla's aggressive pricing strategy will help the company succeed, she also expressed optimism about the company's future, predicting a potential five-fold increase in stock price over the next 5 years from electric vehicles alone, which could increase the price by up to 13 times if autonomous cars become more common. The other auto manufacturers will have to follow Tesla's price declines, which will hurt them quite significantly from a margin and profitability point of view. Almost 5,000 investors and media representatives flocked at the Metropolitan Opera House in New York City to attend the annual investing conference, hosted by billionaire money manager Ron Barron, despite a challenging year for the U.S. stock market. Despite Tesla's rocky start to the year, an on-stage interview with Elon Musk was one of the event's highlights. Despite the decline, Barron has an astounding 45 of his largest funds invested in the company's shares, up 41 in early 2021. With the Barron Partners funds returning an average net analyst return of more than 25% over the previous 5 years, the firm boasts a strong long-term gain. Given Tesla's strong growth potential and buy and hold investment approach, Barron expressed confidence that his money will increase. He thinks Tesla would overtake all other companies as the largest and most profitable in the world within the next 10 years. Now let's hear from the one and only Gary Black, whose company is among the top 20 largest stockholders in the manufacturer of electric cars. As the electric vehicle manufacturer recovers volume lost to price reductions, Gary Black, the managing partner of Future Fund and a well-known Tesla investor, forecasts a sharp rise in the company's sales volume in the first quarter of 2023. According to Black, as the market leader, Tesla has more room to discount its prices than competitors because of its higher gross profit, making it a winner in this price war. Black claims that despite a year of disappointments for Tesla stockholders, the firm is still undervalued, particularly when compared to Apple. According to Black, investors are optimistic about Tesla's future prospects. With this share increasing more than 50% in the last month, the company has shown significant growth over the years, with a $1,000 investment worth almost $200,000 in 2011. The company has ambitious plans to expand into AI and robotics, and investors are hopeful about its potential for future growth. However, some concerns remain regarding the company's ability to meet its production targets in 2023 due to supply chain disruptions and COVID-19 related shutdowns. Microsoft, Amazon, and Google, on the other hand, are growing their volumes at a rate of 30 to 40% per year. These companies should be trading at a higher multiple than GM, Ford, or Volkswagen. Despite these difficulties, given its current achievements, Tesla looks like it will prosper in the long run. Purchasing Tesla stock is possibly the best choice you can make right now if you want to leave your work by 2030. For more videos regarding Tesla stock, subscribe to this channel. Hit the like button, and I'll see you in the next video.